Hello friends, in today's video we are going to discuss about 10 market leader companies which are available at a very good discount because of the current market condition. Currently there is a lot of uncertainty in the market because of Hindenburg and Adani issue, because of the budget, and whenever there is uncertainty you will see market behaving in this manner. But these type of uncertain situations are an excellent opportunity for long-term investors, for new investors also who are thinking of building their portfolio, and for the existing investors also who want to add more of their favorite companies or wanted to enter into the market leader companies. So let's focus on the opportunity and start the video. First company is Titan, and if I look at 1 year return, it's been in negative, almost flat. If I look at 5-year return, it's been fabulous, 183% return, and maximum return has been 54,500%. And you can see an excellent chart pattern also going from the bottom left to top right. And you can see the profit growth of the company. Profit growth has been tremendous. The 12 trailing month, it has increased its profit by 81%. And sales growth also you can see it's in double digits. In the 12 trailing month it is in 40%. And stock CAGR also you will see 10 years return have been 24%, 5-year 21, 3-year 26. So you can see how consistent the return has been, and that is why these kind of companies are known as consistent compounders. And the return on equity also you can see it's in the 20 figures. For most of the companies, if the return on equity is above 15%, that is considered as a good percentage to start with. The market cap of the company is 2 lakh crores. Now there can be questions in a lot of people's mind that all these market leaders are already big, so how more big they can be or how more they can grow. There is nothing wrong with this question. This is a valid question, but we also need to understand how big the industry is to which the company belongs to. If this company belongs to an industry which itself is very small, then obviously the company will not be able to grow that much. But if a company belongs to an industry which itself is very huge, like in this case, the opportunity for this company to become even more big is definitely there. Tanishq right now only has around 10% of the organized market share. You can imagine how much potential is still available in this company. And one more thing I want to tell you guys is that the large cap category keeps on changing. Before few years, when the companies had market cap of more than 20,000, they were considered as large cap. So these companies were large cap 5-10 years before also. But now the definition of large cap has changed. Now any company which is above 50,000 are considered as large cap, and a company between 20 to 50 are considered as mid cap. And this will keep on changing as and when India grows. So do not worry too much about the size of the company till the time the size of the industry is very big. Now we are at the chart for Titan, and this company is currently available at a discount of 16 to 17%, and 2300 is its important support. You can see earlier there was a resistance here, and company bounced back from this level earlier as well. So this could prove to be an important support for this company, and 16 to 17% is also a good percentage discount in case you have not entered into this company. For people who already have share in their portfolio, they can also wait if they want and wait for this company to give more discount and see if this company comes to around 2200 level. Because when it comes to 2200 level, the discount will be close to 20%. So then you can think of adding more of this company, because then the discount will also be very good. But this is an excellent company with excellent business with a very huge possibility of growing in the future also. And this company is also expanding its stores network not only in India but outside India also. I have personally noticed 2 more stores near to my area, so you can keep focus on this company. Next company is PI Industry from the agrochemical sector. This company is not actually the leader in specific term, but it is very close to beating the current leader in its sector, which is UPL. If I look at 1 year return, the 1 year return has been 21%, which is still very good. 5-year return has been 233%, which has been excellent, and maximum return has been 3900%. For this company also you'll see the same chart pattern of going from bottom left to top right. The market cap of this company is 44,000 crores, so it is still a small company compared to other market leaders. And you can see the profit compounding growth here, it's very healthy. Similarly, the sales compounding is also very healthy, and the stock price CAGR return has also been excellent. You can see that this company has also provided consistent return to its shareholders, and the return on equity also is above 15%. Now we are at the chart for PI Industry, and this company you can see made a high at around 3700, and currently it is down to its support level, which is 2950. You can see earlier there was a resistance here which was broken and company went up. Again it went down and took support at this level, which was its resistance, because the resistance, after a company breaks the resistance, the same resistance becomes the support, which you can see happening at this area. And again now company has come back to its support level, and the current discount available on this company is 20%. So this is a very good entry level if you want to get into this stock, if you like the company. But also remember one rule, that do not invest your lump sum amount in any company. Whatever amount you want to invest in a company, try to break it down into 3 or 4 installment, because you never know till what level the market will fall and till what level you can get a discount on the share price. Next company is DMart, also known as Avenue Supermart, And if I look at 1 year return, it is in negative minus 13%. 5-year return are still excellent, 214%. And maximum return, again you will see the same thing, chart pattern of a company going from bottom left to top right. And you can see the detail of the company. The profit has grown at a very good rate. Similarly, the sales as well is growing at a very healthy rate. And if you look at the CAGR, 5-year and 3-year have been consistent. Only in the last 1 year you are seeing a dip. And the return on equity has been in double digits. The return on equity in these type of company which are belonging to the retail sector or companies belonging to the banking sector, you will not find the return on equity to around 20-25% level. In those cases, you have to compare the return on equity to the companies of the same sector. Now we are at the chart for DMart, and you can see that this company went down till 3450 levels. From there it has come back to 3500 levels. So currently this level is acting as a support. In case if it falls further, then 3350 and 3250 will be its support levels. Currently the company is available at a discount of 22% from its 52-week high. For this company also, I believe this is a very good opportunity. If somebody liked the business of DMart, they can think of entering into this company right now, because from here the downside is very limited, but the upside in the long term is very high. So you can keep focus on this share as well. Next company is Bajaj Finance, and if I look at 1 year return, it's a negative 17%, and 5-year return again has been excellent, 254%. If I look at maximum chart pattern, the returns has been 1,00,000%, and you'll notice the same thing, same chart pattern of going from bottom left to top right. Bajaj Finance also, as we know, it's the leader from the NBFC sector. The profit of this company are increasing at a very healthy rate, and you can see here the profit compounding growth has been excellent. Similarly, the sales growth is also excellent. The stock price CAGR is also beautiful. 10-year CAGR is 46%, 5-year 28, 3-year 10. In 1 year it's been in negative minus 16%, which I believe is a great opportunity, and the return on equity is also above 15%. Now we are at the chart for Bajaj Finance, and this company is down from its 52-week high by 25%. 5500 is its very important support. If you are able to get this company at 5500, then it will be an excellent entry level. This company also has recently published its result, and the results have beaten the expectation of the market. So there is a possibility also that we may see this company going back from this level, or there is also a possibility that we may see this company touching 5500 level because of the market condition. But this is a type of company which you should think of accumulating whenever you get it on discount, and these are the type of situation when you get these market leader at discount. Whenever everything will be fine, which eventually will happen after 1 year or 2 years, the US inflation issue will go away. Sooner or later the war of Ukraine and Russia will also stop. Once these two things happen, then you will not find these companies, these market leaders that we are discussing, at these attractive levels. Because whenever market starts to predict that those situations or those issues are going to go away, then these stocks will become rocket. Right now it must be getting very difficult for you to believe what I am saying, and that's completely fine, because this is what fear is all about. That's why these are called crisis situation, fear zone situation, when there is fear in the market, because that is the time that maximum people do not invest, and that is also the reason that maximum people do not make money from stock market. Anyone who will invest in these fear situation, in these crisis situation, is going to benefit the most when the situation goes away and when there is a bull market. And there is also one saying in stock market that people become rich in stock market not because of the bull run, but because of the bear run, because they invest maximum of their capital in the bear market. Next company is Astral, and 1 year return has been in negative 9%, and 5-year return again has been tremendous, 317%. If I look at maximum chart pattern, it has provided return of 35,000 to its shareholder, and the same chart pattern of going from bottom left to top right. For this company also, you can see the profit compounding has been very good. Sales compounding also is excellent, and the CAGR percentage is also very good. It is almost equivalent or better than Bajaj Finance, you can say. In 10 years it has provided CAGR of 47%. In 5 years and 3 years the CAGR has been above 30%, and the return on equity also, you can see it's above 20%. This is a leader in the piping segment, and the market cap of this company is still very small, and this company also works in a sector where it is still dominated by a lot of unorganized player. And this company also has huge potential to grow in future, because what this company is gradually doing is taking the market share away from the unorganized sectors, and this company will keep on growing. Now we are at the chart for Astral, and this company is available at a discount of 26% from its 52-week high, and currently it is available at its support. You can see that this company took support at this level, then again here, and again it is taking support at the same level, which is 1960. You can keep this company on your radar, and if you get this company at 1750 level, because this is its important support, then it will be an excellent entry point for this company. But at this level also the discount percentage is very good, so you can think about this company. Next company is Asian Paint, and if I look at 1 year return, it's a negative 13%, and 5 year return, again you'll see it's still in positive 140% return. If I look at maximum chart pattern, you will see a return of 22,000% and the same chart pattern. And here you can see for this company the profit growth has been in double digits. In the last 12 trailing month it has been even better, 26%, and similarly the sales growth also you can see it's in double digit. Return on equity is about 20%, and stock CAGR you can see 10 years is 20%, 5 year 19, 3 year 15. The CAGR earlier was in 20 figures for all 10, 5, 3 years, but it has come down now because in the last 1.5 year the share has not performed very well. But that's a temporary problem. This company will definitely come back in next couple of quarters. And if you look at the quarterly result, you will see that company has started gaining back its OPM percentage. OPM percentage was 18%, then it fell to 15. Now it has again come back to 19%. And the reason is simple, that whenever there is a high inflation situation, then the company OPM suffers, but then the company also increase the prices of their product. And once the inflation goes down and the cost of their raw material goes down, the prices of their product still remain same. So eventually they end up increasing their OPM percentage. And earlier you can see that the OPM percentage was even at 24-26% level, and this company will achieve that percentage in the coming quarters. But it is very difficult for these company to not perform for a period of 3 years continuously. You will see these company coming back to their previous level and breaking their old high as well very soon. Now we are at the chart for Asian Paint, and we all know Asian Paint is the market leader in the paint segment, and currently it is at a discount of 24% from its 52-week high, and it is very close to its very strong support of 2600. You can see company bounced back from this level earlier as well. It is very close to 2600. If you want, you can wait for this company to fall to around 2600 level. If it does, that will be in point to accumulate this share as much as you can if you like the company. Next company is Pidilite, and 1 year return has been in negative 6.5%. 5 year return again excellent, 166%. And if I look at maximum return, it has been 36,000%, and the same chart pattern of a consistent compounder company going from bottom left to top right. The sales compounding of this company has been healthy. The profit compounding for this company is not looking that great because the profit has not increased to a good percentage in a couple of years. They were pressured due to COVID earlier, and then there was an issue of inflation. But this company has the potential to come back from this situation. This company has done it earlier as well. So now I'm at the yearly profit of the company, and you can see that during 2011 to 2013 profits were almost flat, but after that it started increasing, then to 600, 700, and then it increased to 1100, 1200, 1300. So this is the pattern that we have seen in this company, that profit remains flat for few years, but after that we see a good increase in the profit numbers. Why? Because the company keep on doing the capex. And whenever the capex cycle is over, then we see a huge upside in the company's profit. And we have seen the chart pattern of the company, it is consistently going up. And a lot of people have doubt on the valuation of this company. They say that the valuation of Pidilite is very high. It's 93% compared to other companies in its sector. But we also need to understand that there is a reason why the company get these type of valuation. Market always give good valuation to consistent compounder companies, to companies which are having good market share. There is an absolute reason why the valuation of this company is 93% and why the valuation of Tata Chemicals is 12%. And in this chart you can see the valuation of Pidilite. The PE for Pidilite has been 75% on an average over the period of 5 years. So the valuation of Pidilite has always been on a higher side, but in the 5 years we have also seen the return. The returns have also been excellent. And now we are at the chart for Pidilite, and this company made a high at around 2900, and from its high it is currently at a discount of 21%, and it is available at its very important support. You can see that this company was facing resistance here, and now this resistance has become its support. And if this company falls further, then at every 100 level there is some support. So if you wanted to invest in this company, maybe you can divide your capital into 4 installment. Let's take an example. You wanted to invest 1 lakh rupees in Pidilite, so you can divide it into 4 of 25,000 each, and at every 100 level you can add those installment. Because looking at the market condition, there is a probability that you might get it at a further discount, but there is also an equal possibility that it might go back from this support. Next company is Divi's Lab. If I look at 1 year return, it's a negative 16%, and 5 year return are still very good, 228%. If I look at maximum return, it is 37,000%. And for this company also the same chart pattern going from bottom left to top right. Currently it is going down, which is an opportunity to invest. This company is a leader in the active pharmaceutical ingredients manufacturing, which are important components or raw materials which are used for various important medicines. And this company also has a huge potential to grow in future. 80% of the APIs that are produced globally are manufactured in China. But gradually the business is going to start coming to India, and if you look at the profit compounding of this company, it's been very good. Same, the sales growth also has been very good, and the return on equity also you can see it's been above 20%. And stock CAGR also you will see consistent performance of about 20% over the period of 10 years, 5 years, 3 years. Only in the last 1 year there is a dip, which I believe is an excellent opportunity. Now we are at the chart for Divi's Lab, and this company is down by 27% from its 52-week high, and 3300 has become its very important support level. You can see that this company has started consolidating at this level. So in case somebody wanted to invest in this company, this is a good entry point. Next company is Havells, and if I look at 1 year return, it's in negative -1%. 5-year return has been still better, 128%, and maximum return has been 61,000% return. And you'll notice the same chart pattern here as well, going from bottom left to top right. This company is from the FMEG sector, which is the fast moving electrical goods sector, and it has 5 major brands under its umbrella, which is first one Havells, Crabtree, Lloyd, Standard, and Rio. And here you can see the profit compounding of this company. It's been very healthy. Sales compounding also is very healthy. Return on equity also you can see it's about 20%, and stock CAGR also you can see has been very good. 10-year returns 24, 5-year 16, 3-year 25. This is also a very good company, a leader in the FMEG sector. There is one more company which is a leader in the wires and cable sector, which is also somewhat related to electrical segment. But in electrical also there are 2 sub-segment. One is more on the wires and cable, in which Polycab is the leader, and the second one is on the electronic equipment, in which Havells is the leader. Both are good company, but we are discussing Havells because Havells is available at a discount right now, and on Polycab the discount percentage is still very less. Now we are at the chart for Havells, and this company made a high at around 1400, and it is currently trading at 1170 rupees. It is down from its level by around 17%. If somebody is looking to get more discount, then you can wait more and see if this falls to 1100 level, because this level will be a very good level to enter into this stock, and if it falls further, then the next support will be around 150 rupees. But 17% discount is also a very decent discount in case somebody wanted to enter into this company. Our last company is Infosys. It may not be an actual leader in the IT sector, but I consider TCS and Infosys more or less similar companies because their management is trustable. Both companies have provided excellent return. So it all comes down to where we are getting more discount, and currently we are getting more discount in Infosys instead of TCS. So that's why we are discussing Infosys right now. If I look at 1 year return, it has been negative 12%, and 5-year return again very decent, 165%, and maximum return you can see 13,000% return. And a similar chart pattern of going from bottom left to top right. And you can see here this is TCS and Infosys, and currently in Infosys the discount percentage is 21%. And for this company also you can see profit compounding has been very good, considering it's a very big company. 10% profit growth is also a very good growth percentage, and similarly the sales growth also has been very decent. Return on equity also you can see has been above 25%, and stock CAGR has also been decent. 10-year CAGR has been 16%, 5-year 21, 3-year 25. Now we are at the chart for Infosys, and this company is available at its very important support of 1500. You can see earlier also this company took support at this level. If it falls further, then it can come down to 1450 or 1400 level. So you can keep your focus on this company also. This also is a very good company, and the story of IT sector is not over yet, and it's not going to get over in the next 20-30 years, because this sector has now become a very essential sector. All the companies that you see nowadays need IT support. They cannot survive in today's world without IT, and these companies are going to become even bigger. In the top 3 IT companies of the world, 2 companies are Indian companies, which is TCS and Infosys. This sector is dominated by India and will continue to be dominated by India in the coming years also. So that's all in this video. If you like the video, please hit the like button. This will motivate me to make more videos. And also, if you have any suggestion or if you want me to make a video on any specific topic, you can mention it in the comment section. And if you are new to this channel, do hit the subscribe button so that you can get regular update whenever there is a video uploaded. So bye for now. We'll meet in the next video with some new information. Thank you.